Welcome traders to the live webinar with Admiral Markets. My name is Chris. Today's focus as always on technical analysis, looking at Forex, commodities, stock indices, charts. Before we look at the live price action, be aware that this webinar is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more information and to find out if it is suitable for you. Also, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right. Before kicking off any analysis or trading, it's always good to be aware of the calendar. You can check that out by going to Analytics on the admiralmarkets.com website and going to Forex Calendar, and you'll be able to find important, less important, medium important events. But it's always good to be aware of those and trade, adjust your plan accordingly to those events. If you're already on the Admiral Markets website, then you can also check out the MetaTrader 4 Supreme Edition. If you're not aware of that, that's an extra plugin with 60 features that are added to the usual MT4 platform, and you can find that out right here. A lot of good things like indicators and tools and information such as correlation matrices, etc. And also, of course, there's a lot of education and analytics to be found. So we hope that you'll make this website your home and your hub to tackle and understand the markets. All right, so I wanted to use a different profile, so let me switch there quickly. That will just take a minute. We're going to take a look at the candlestick and Fibonacci patterns at support or resistance. So this is an interesting combination. Basically, what we're looking for are support or resistance levels, of course, that are strong, that have confluence, and where price is most likely going to make a decision of breaking or bouncing. With candlesticks and Fib patterns, we can monitor basically the break or bounce at support or resistance. So, for instance, bearish candlestick pattern is indicating a bounce or a break. Perhaps the Fibonacci pattern could indicate that price is making a pullback, for instance. So let's take a real-life example to put those three pieces of the puzzle together and how they can be used in a trading plan. So let's take a look first of all at, maybe we can take a look at, let's see, Aussie dollar, for instance. Okay, let's take it out as an example. I will just close this mini terminal. It's part of the MetaTrader 4 Supreme Edition. You can take trades with it, but I'll just close it to make space so you can see better. So yesterday we were talking about basically price showing a candlestick pattern. If yesterday's candle would break, or I should say would close near the low and not break above this top, there was a good chance of a reversal. So I'm not sure if anyone was here in yesterday's webinar. If not, no problems. You can always go to YouTube and go to Admiral Markets YouTube channel, and you'll be able to see what I said yesterday. But basically, roughly speaking, I said that if yesterday's candle, which is this one, turns bearish and closes near the low, closes below the pivot point, I think that there's going to be a reversal. So basically, one of the first things one can do to identify trading zones is looking for strong support or resistance levels. So one thing we see here, or two things we see here, is actually Admiral Markets Keltner and Admiral Markets pivot point. So we see the lack of a break at Admiral Keltner indicator. The lack of a price breaking above it indicates eventually a weakness, a potential bounce. And the weekly pivot point, of course, is a strong level 2. It is obviously weekly, so it has more significance than a daily pivot point. And if price that was first above it, actually starting the week above it, would then break below it, that would be a second kind of step towards a move away from that Keltner. So here you can see that we're identifying support and resistance levels, and we're waiting for candlestick patterns to confirm that, wicks and a close, right? So what would be the third step? Fibonacci patterns. And I was saying that one could look for retracement on a lower time frame after today's candle closes. So if you look at this, you can put a fib on today's candle. Now, we didn't get much of a retracement, actually. It looks like really price made a 23.6 fib. It didn't get up to the 38.2 fib. So in this case, the retracement was very shallow, and it is therefore very likely that someone waiting for a retracement could have missed this opportunity to short it. And although it did move from the 23.6 fib to the minus 272 fib and hitting almost the S1, there's a good chance that that particular bounce was too shallow. However, you can quickly imagine, I think, that if price would have made it to the 38, back to the 38 and pivot point, that would have been a very sweet trade down to the S1. And that could have been a fib pattern. So basically, break, pullback, continue, and the fib plus the pivot point would have been a good confluence level. So this is one way of combining fibs, support resistance, candlestick patterns together. All three of them, they're a strong trio. Support resistance often is best on a higher time frame. Candlestick patterns and Fibonacci patterns are typically better on a lower. So if we're looking at a 4-hour chart, it could be good to look at support resistance, and on an hourly chart to look at candlesticks and fibs. But there are a lot of combinations possible. This is just one kind of guideline. So that's one currency. Let's take a look at the euro dollar. I talked about this breakout candle yesterday too, and a retracement for more downside. So now, what I said yesterday, I kind of retracted a bit this morning. I don't know if you look at my wave analysis at all. I'm not sure, of course, if any of you are necessarily wave analysis fans or wave traders. But basically, I did change my outlook this morning, and it has to do with the fact, sorry, okay. That has to do with the fact that there's a bit of divergence between these bottoms. And I think that from that perspective, and the hourly chart as well. So from this perspective, sorry, I didn't want to zoom in that much. I think there could be a bit of a correction before a new trend down might emerge. So I was a bit cautious with lighter retracements like this, and for good reasons, as you can see, because after the light retracement here, price didn't go anywhere and actually started to move up again. So from this perspective, I don't think that this is a particularly good example at this moment. But if the euro dollar would get back up to the pivot point, for instance, I think that could be an interesting resistance zone where I would be interested in looking for a candlestick pattern. And if price does this and then turns, I could put a fib from here to here. I could look for a pullback and look for a bounce there. So this is how you can see we have support and resistance, we have candlestick pattern, and then we have a fib. And it's all about basically, obviously, break, pullback, continuations, and bounces, and these tools help us guide us about that. Of course, one could have, due to divergence, a counter idea, a counter trend reversal idea would have been to trade it upwards from the S1, and a candlestick pattern could have confirmed such a thing. I personally do not see any particular strong pattern on this 4-hour chart. We got a couple of good 4-hour candles to the upside, or not even good, relatively small candles. I don't see much in this bounce personally. But, sometimes price even makes bounces when when the candles are, of course, not necessarily showing a lot of strength, and that's what's happening right now. I do think that if this candle has a wick, that could be some reversal signal. Ultimately, it is at the long-term moving average still, bouncing off the S1 and Keltner. So there's a decent chance that this will be basically a bounce for that upside to the pivot point. It is a reversal idea, so it's not as strong. If that happens, price might make something like this, like that, and then turn and fall like that again. Pound dollar, I was talking about putting a fib on yesterday's candle if the candle close was near the low. So I left that fib on, and so far the 61, I said the 38.50 is ideal. Price even made a spike to the 61.8 fib. Now the reason is that price is breaking support trend line, breaking the moving average, breaking the weekly pivot point. So that is a break of support in my opinion. Hence that I think that this is a good candlestick pattern, a good candle confirmation, and therefore the next step, a fib. So here again, support resistance, candle, and fib. One more example, and so far price is respecting this level. But if I were to look at the 4-hour chart, one has to, of course, conclude that that is a very strong candle. Without any doubt, we saw a massive upside on the hourly chart. So I, due to that, factor correct kind of my yesterday's analysis. Yes, the daily candle is strong from yesterday, but the 4-hour chart is making me, let's say, not so excited about shorting it anymore. So anyone in that trade, I would personally take it off or trail stop it very tightly, remove the risk off the table, because due to the 4-hour strength of that candle, there's a good chance that this could turn into a zigzag and head to a higher fib, like the 78, 88.6 fib, and 88 is together with the weekly pivot point. And if that does not happen, of course, price might still, it doesn't have to get up here. Nothing, the market doesn't have to do anything. But then in that case, I would rather wait for price to make a sideways zone like this and then break through support rather than take the trade here, because this is, mind you, a very, very strong bounce, a very strong candle. It is about 110 pips or so. Yeah, those things are pretty nasty if you're trading against that. I would definitely not want to trade against that. And I think that the candlestick pattern invalidates the fib pattern, fib trade that I was thinking about yesterday. So that sometimes happens, of course, when the new information arrives, when new candles arrive, and I think we should, most of the time, we should take that into account and use that information to make new decisions, new optimal decisions, rather than just stick to older information. 4-hour candle is not just some small, insignificant time frame. It is a substantial time frame, in fact. And I think that, therefore, if you manage to catch the 61.8 and catch a few pips like that, that's great. But I wouldn't count on much more necessarily. It might, but I don't think it's a good for the short at the moment. I would rather wait. Kiwi is going sideways at this moment. But yeah, it's a good example of if price were to break this trend line, I would say. It's a trend line with 4 hits at the moment, 4 touches, and there's a weekly pivot point as well. So if there's a candlestick breaking above it like this, that would indicate the potential breakout. Could put a fib from this bottom to this top, hope for this little bit of retracement to the fibs, and then try to trade a continuation. The Kiwi looks like an example that might be interesting for a breakout in the near future. This week, maybe next week. So time will tell. We don't know, of course, the answer. Only by waiting will we find out. So let's see. Even the downside, of course, is an uptrend. I think the upside is better. The downside, if it does break through this support level like that, but the thing is, I don't like it that much because new support levels are quite close by. That's always a disadvantage when trading against the trend, is that often you're fighting against multiple layers of support or resistance where price has to break through. Not always, but it does happen often. So that's a bit tricky. When it breaks one level or layer, it quickly kind of goes against another one. So that's why I think it's difficult to trade reversals as well. Okay, so dollar CAD is making that zigzag. I did talk about the zigzag potential with this candle, and from that particular candle close, the currency has moved up about 50 pips. It's up 35 pips at the moment, and it is making kind of the zigzag. I don't know if it will reach the target. The target is the minus 61.8, and this formation could happen. That's a reversal setup, and it has to do with the fact that basically we saw a bounce at the 88.6 fib and a candlestick pattern. So, but it looks like it could happen. If anyone is in that trade by any chance, I would probably recommend it to move to break even because it is counter trend, therefore quite risky. Gold is making a sideways consolidation. We looked at that yesterday, and the price basically, making a bit of a pause at this moment. But if it does show a bullish candle like this, it could be double bottom, and there could be some retracement on gold. Ultimately, though, it's quite a big choppy range. It might just, looking at this daily chart, nothing special really. 4-hour chart downtrend. I am not a big fan of trading this one at this moment. Let's move on and see if we have something more interesting. Pound yen, we did talk about that yesterday. If I remember correctly, price was approaching this weekly pivot point, and I think that I was saying that price should bounce at one of these fibs. Ultimately, it bounced roughly at the 61.8 fib at the 140 round level as well. And as you can see how I have the fib positioned from this bottom to this top, I was looking for a counter trend reversal zigzag or full reversal. So far that has happened, pretty good 4-hour candle at those fib, at the fib. So I like that confirmation. And I think that that is a pretty good signal if anyone is in that trade, and might be even worth moving to break even. The trade is up 100 pips, was up almost 200. So target ultimately though is this minus 272 target. So, but if you waited for the candlestick confirmation though, by the way, all right, and you didn't take the fib itself, then it is a bit more difficult. This was not a good signal. It just had a little bit of a wick. This is a good signal, almost too good, because it basically is so huge that the entry could be here, and that's pretty far from the 61.8 fib. So alternatively, if you bump into such a big candle, you can always put a fib on the candle. So rather than taking the candlestick pattern at this fib, we will be taking the pattern after the pattern and looking for instance, a hook back to these fibs as a bounce pullback continuation. That could be an alternative to try to catch this pound yen. It is risky, this one. I do want to emphasize that particular point because of the fact that this is reversal territory. Look at the moving average, price is below it. Let's see. Euro odd took me out yesterday. It took me just for a very, very small loss. I placed my stop loss above these fractals, and ultimately price broke above the 21 EMA band and made a retracement higher up to the long-term moving average. And that is when actually price resets itself when it hits the long-term moving average. It is out of its trending mode, and it's either correcting or reversing. So let me start here from scratch, and you can see that the euro had a great trend to the downside, really lots of pips. Just a quick calculation here, about almost 500. So sweet, sweet movement. Now I'm waiting for price. This is not interesting for me at this moment for the euro odd because it's in a downtrend, but it's retracing up, and I don't know. I don't see any, at this moment, anything particularly interesting. Let's see. Well, only the daily chart. Maybe if this is a good daily candle, daily close near the high, above the pivot point, not too small, then that could maybe be a first warning that this is over and we might make an upside that could retest R1 or R2. From that perspective, if today's candle is closing strongly, there could be something like this going on. And waiting for a head and shoulders like this could be interesting on the year odd to the upside, ironically, so that would be a reversal. Otherwise, I don't see anything interesting at this particular moment. Nothing really new at this point. So good. Let's take a look more at a few historical examples, perhaps not so historical, but from the recent past. Does anyone have a particular currency pair that I can show you, like some examples from the recent weeks? What currency pair do you prefer? Let me know, and I'll take a look at that. So I'll wait for the first person to respond. One currency pair. Pound yen. Great. I'll take everything, or not everything, but I'll just refresh this template. And let's use Math because Math is automated support resistance levels. Already. All right, there we go. So finding support resistance confluence, I think, is always good if there are three reasons. And that could be, for instance, that could be, for instance, the Kellner, a pivot, and this Math, for instance. Now, I don't necessarily have to find three here. This is just to give you some example of how we could look at it. But you can see that price is in a downtrend, but it is reaching kind of a bouncing spot with the Math, right? especially 4.8 to 6.8 is a bouncing spot right here. So as price reaches that, tries to break through Keltner, we could wait for some candlestick patterns in this zone to see if there's a bounce potential. There's also divergence between these bottoms on this 4-hour chart. So definitely would not be looking that much at this candle. This is a breakout candle, in fact. But when you see, for instance, this one here, very neatly showing engulfing twins, not engulfing twins, sorry, but in any case, 1, 2, 3, no time factor either, but definitely bearish followed by bullish candle. I think that's a pretty neat, pretty decent indication that I'm not sure what the pattern is, but that there will be an upside. And if you take that bounce, for instance, right there at the support, you will get some pips, as you can see, nicely moving to about the 1/8, and that could be a good target, or the 8/8. I would not take this as an example because there was a bit of a gap there, but sorry. One could do the same with downside, of course, when price breaks, pulls back. You can see wicks here indicating weakness. So that's candlestick patterns at resistance. And one could look at lower time frames here, put a fib from here to here, look for a pullback and continuation, for instance. So there's a couple of examples. Of course, when price is going into the zone, right, but you see that price is making a very strong statement. Excuse me. So this is the sweet zone, but price, instead of respecting that zone, it's showing a massive breakout candle like that. Obviously, this is not reversal territory, and that is a breakout candle, or it's at least a strong candle that is by far not a reversal candle. So even if that's a sweet zone and price is making a correction back to that zone, and it could be a bouncing spot for more downside, the candlestick patterns are definitely not confirming anything of a reversal, and it would be good to steer away, stay out of shorts, and just sit on the sidelines perhaps, or maybe even look for a continuation to the upside. And there was a small one indeed. So that's how candlestick patterns can invalidate a confirmation, or sorry, invalidate a potential area as well, even though you think it's a pretty strong bouncing, bearish bouncing spot. So any other examples? Well, we talked about this one already, and this is a pretty strong engulfing twin here at high Murray math level plus Keltner and moving average. So yeah, this candlestick pattern was also pretty interesting, right? So just a couple of examples. How you use support resistance is up to all of us. I do use Murray math. I do use fractals. I do use fibs. I do use pivot points and Keltner. But I don't need all of them. I just use for a confluence, and then I use patterns to read the kind of market psychology. So Felix is saying, do Fibonacci work on all time frames? Mostly yes. I think you can use them on all time frames. I mean, you can use fibs on swings. You could place fibs on a candle. You can so from this perspective, you could put it on a daily candle, a monthly candle. Now, regarding lower time frames, like 1 minute, 5 minute charts, when the market is trending, I think that should be fine. Just got to be aware that if, of course, there's a range, it's not going to be so valuable, or that I should say it differently. It's actually doesn't make any sense to use fibs in that case. On any time frames, but especially I should say lower time frames. So yeah, it's okay. You can. I mean, the higher time frame is probably, but the fib has more value, more strength. But if price is really trending and there's a lot of momentum, Yeah, even lower time frames. I would not use it personally on 1, but 5 it could be fine if it's really a good trend going on. Let's take a look at, for instance, let me think for a second. Euro odd, for instance, right, was trending a lot. So if you see a strong momentum like this, or you see I'm not sure if I see anything of a better example, but um, let's see. I don't see anything that really describes what I want to show you, but well, even this. Let's say here we see momentum, right? Putting a fib on that and waiting for a retracement like this is okay. Is fine. And price falling towards the lower targets. What is the minimum high and low? I'm not sure actually what you mean with the question. Can you rephrase it with what you mean with minimum high and low? And in a trend, okay. And the next part, Felix, thank you so much. Great to hear that. That is really a very nice compliment. Felix was saying that that we have the best, with emphasis on best, education. So that's really very kind. That's great to hear. We like those comments. We definitely appreciate them so much. And with regard to minimum high and low in a trend, that the good thing for that is to use an oscillator, for instance. So like this, if you look at it this way, you can see that this piece right here, this swing high, swing low, as it crosses the zero line and then recrosses here, this is typically how I look at it, is one swing. Here it crosses, here it recrosses, this is another swing. So you have swing, swing, swing. Looking at the oscillator, that's what I see. So oscillator, awesome oscillator is very useful for identifying momentum. You could use different things, of course. You could use naturally tops and bottoms are good moments for that. You could use fractals. Fractals, they often occur. You can use my custom-made fractals. Those are a bit different than typical fractals. And what else can we use? You can, of course, just take a natural look at the price. I mean, obviously, this is one piece. This is one piece. This is one piece. You don't need the oscillator for that. You can naturally see those candles kind of glued together almost in a way. All right. So I hope that helps a bit at least. It does take some practice to find those swings, but eventually it will become more natural. I think the alpha oscillator is really one of the best ways to deal with that and make it more mathematical in a way. So, any other questions? Any other questions you have regarding candlesticks, fibs, or of course supportive resistance? We had supportive resistance webinars about 2 months ago. We dove into all kind of details about when price approaches supportive resistance. If you didn't see those, I would definitely recommend that. Otherwise, of course, please take a look at DAX trading, MetaTrader 4 Supreme Edition. So many extra useful features. I think you'll be surprised. Of course, not necessarily every single one of them. There are 60 of them is tailor-made for what you will use, of course, but I think you'll find many that you will actually find useful. And you can check out the volatility protection settings, Forex 101 lessons that Bennett and I made. You don't hear our voice, but we made the content though. You can find more webinars, of course, by going to Education Forex and CFD webinars. Tomorrow we're taking a look at Bill Williams' chaos system, so I'm looking forward to that. And automatic is actually, as you know, perhaps know, is part of the indicators that Bill Williams has made for his own trading. So we'll dive into that a bit more. Next week, of course, we have the same schedule. Ultimately, we can take a look at maybe the Euro odd, for instance. You can even use a moving average to understand the trend. So for instance, you can see how price is trending up, price is above the long-term moving average. And as price retraces back in the Keltner band, all right, we can see that as a pullback within the trend, right? So most of the time that works well, except of course when you get the reversal logically. So even like that, if it's trending, so what is the support in this case? The bottom half of the Keltner, right? And what are candlestick patterns at that? Bullish candle, bullish candle, bullish candle. How could we use fibs? Like this, from here, I guess, from here, maybe even from here. And we could even put the fib on bigger swings, of course, even from here to here if we think it continues. So, that's a very simple way, in a way, but price, moving average, candles, the Keltner, you can combine those things as well for interesting candlestick and fib patterns at the support in this case, but also resistance, of course, when the trend is down. Alrighty, folks. Well, I think that we'll wrap it up for today. We'll keep it a bit shorter than usual, but that's okay. We have a video that we can add to YouTube that's maybe not as long, that's also sometimes beneficial. We will be back, Ned and I, specifically tomorrow and next week, so I'm really looking forward to discuss all of these techniques and tips again, and wish you great trading, and see you all very soon. Cheers.